What up? Crypto Warriors and Sergeant Crypto back at it again. Today is Sunday, June 28th, 2020. History doesn't repeat itself, but it often rhymes. Mark Twain. Today, I'm going to go over two articles that gives the reason why Bitcoin is valuable and the blockchain as a whole, the crypto industry as a whole, why it's valuable, by giving you examples of things that happened in the past. Let's get into it. This first article here is coming out of Forbes, written by Matt Hogan. He's the global head of research at Bitwise Management. Why Bitcoin is valuable, debunking the greater fool theory. I speak with a lot of investors about Bitcoin, and they raise a lot of questions about custody, volatility, and evolving regulatory standards. By and large, it's easy to mitigate these concerns. Fidelity offers custody, Jane Street makes markets in Bitcoin, and regulators are taking an increasingly proactive approach to the space. Why does Bitcoin have any value? This is the objection that has been tripped up by Jack Bogle and Warren Buffett. But Buffett said to CNBC, cryptocurrencies basically have no value. You can't do anything with it except sell it to someone else. In the financial literature, this is known as a greater fool theory. The idea is that you should never invest in something if its value depends solely on selling it to someone else at a higher price. Stocks, bonds, real estate assets generate cash flows and can be valued based on them. The thinking goes, Bitcoin doesn't create anything at all. Why then do we think Bitcoin has value, or why it's valuable? A lesson from the history of crude oil. So this author is taking it back, way back to the 1800s. Prior to the late 1800s, crude oil was mostly a nuisance. All right, that's until the 1850s when George Bissell had a big breakthrough, and he wondered whether rock oil, as it was called, could be processed and used as an illuminant, replacing coal oil for kerosene lamps and as lubricant for machines. So he was an early developer and an adopter. You know, he came up with an idea, saw that maybe he could use crude oil for some reason, and started developing ways to use it. He was still too early. That's until, as automobiles grew from toys to essentials, demand skyrocketed, and by the end of the 1920s, 85% of oil production was used towards fuel. Bitcoin today is analogous to oil after the development of the kerosene lamp, but before cars, planes, and the rest. So we're still early in the fact that they don't have the machines, so to speak, to use Bitcoin as the fuel to get those machines moving. It is a commodity with certain limited but meaningful real-world uses. Individuals use it today to store savings outside of the fiat currency system, digital gold, to move money across borders, and to settle large transactions quickly and in an irreversible fashion. In certain countries, it provides a release valve for citizens concerned about oppressive regimes and a way to expatriate money with limited physical risk. But like oil in the late 1800s, these applications are just scratching the surface of Bitcoin's potential. We're still super early. So when you think that Bitcoin don't have any real use case because we have Venmo and PayPal and Zelle and all these other fancy apps that were developed because of Bitcoin, remember, we're still super early. Although Bitcoin, it has been around for more than a decade now. Kerosene lamps were a proof of concept. Oil's real value lay in being a store of energy that could be transported easily and released in an intense fashion. Similarly, Bitcoin's current utility is limited. Its real value lies in allowing money to move at internet speeds and allowing it to be held in an autonomous fashion. Sorry about that. Investors buying Bitcoin today are betting that the future use cases will be built upon these capabilities will be larger than the current market cap of Bitcoin. For example, if 10% of the wealth currently stored in physical gold comes to be stored in Bitcoin in the future, each Bitcoin could be worth around 50K. If the same amount of wealth stored in gold today is stored in Bitcoin in the future, each Bitcoin would be worth 500K. If Bitcoin significantly penetrates parts of the offshore wealth, escrow, payments, remittance, and other markets, the potential is significantly larger. So we have to use our imagination, and that's the thing with human beings. We tend to see things linearly, and we can't imagine the exponential growth of something, especially when it's new. In the 90s, we didn't understand the internet. We didn't understand why the internet would become so important. We didn't understand that it was so disruptive. And it's the same thing with electric vehicles today, i.e. with Tesla. No one understands how disruptive the technology is. Same thing with Bitcoin. The Bitcoin blockchain, it's a disruptive technology. Okay, and people have to stop thinking linearly, although it is hard for us to see things that way. But you got to use your imagination when it comes to the exponential growth and future growth of Bitcoin. Those numbers may seem extreme, but it is worth remembering that digital versions of analog goods are often met with skepticism initially, just like I said. People didn't think digital media would replace newspapers, didn't believe that digital advertising could compete with print and TV, and were hugely skeptical that online retail could compete with physical stores. In each case, time proved them wrong. And that's all it is. It takes time. And again, we've seen it over and over and over again with all those examples that time did prove all those skeptics wrong. Future demand, current value. If most of the demand is in the future, you may be thinking, why buy Bitcoin now? This is where the analogy with oil breaks down. There are two things. Supply. There will only ever be no more than 21 million Bitcoin. Demand could increase 100x and supply wouldn't budge. Storage. One can hold Bitcoin for years at a low cost, waiting for demand to arrive. You can memorize your seed phrase for a wallet. You can have a desktop wallet, a wallet on your mobile app. Again, paper wallet. There's different ways to have a Bitcoin wallet, and just memorizing it and keeping the memory in your head. You can have a brain wallet where no one can have access to it but yourself. So there you have it. Buying Bitcoin today is like buying oil in the 1850s after seeing its early utility, with the big difference being that you know that no new oil can ever be created, and even as demand grows and new use cases emerge. That's the logic behind the value of Bitcoin to investors today. It's not about simply hoping for a greater fool, but rather buying a scarce asset before demand is fully developed. Great article, and he definitely took it way back and just broke it down using an example with oil before the car was invented and before the internal combustion engine, and that enormous use case for oil, which would later, power all of the 20th century. Next, this is an article of a video I did a couple of weeks ago. This article gives a brief history lesson and breaks it down into 4 different phases. On October 29, 1969, ARPANET came into existence. The first message between computers was sent. The user interface at this stage was of little concern, and early adopters were just happy to send messages. That's very analogous to blockchain or to Bitcoin during the early days, when it was just a few people sending value across the internet between each other. During the 70s, several groups developed their own networks, from UUCP to X.25, each one using their own language to communicate. Again, analogous to blockchain, where we have Bitcoin, the Bitcoin network, the Ethereum network, the XRP, DLT, and we have the, Bitcoin Cash, Litecoin. All these other blockchains are their own networks, and they do not communicate with each other. They're not interoperable, and I think the future, or the killer DApp or killer app of the future, will allow all these networks to talk to each other. But it was only on January 1st, 1983, when the existing protocols were replaced with TCP/IP, that these networks were finally brought together. We now had the beginnings of the internet. So phase one, the transference of value. On January 12th, 2009, Satoshi Nakamoto sent value across the blockchain. He sent the first bitcoins to Hal Finney. This was very similar to the first messages that was sent across the internet. From simple terminal-based commands, we evolved to sending emails to complete documents and videos across the internet. So the internet grew over time. We don't even call it going online anymore. With the blockchain, instead of messages, we send value. This will be followed by other definitions of value. For example, tokenized assets, where you can send part ownership of shares between each other. In summation, the internet enabled communication, transference, and the blockchain value. Phase 2, accessibility. Connecting people to the internet was the domain of the ISP, Internet Service Providers, for all those below age 15. We did not need to understand TCP/IP. All we needed to know was where to plug in a phone line. This part is talking about the ISPs and us connecting to the internet via a modem, plugging our phone line in to actually get access to the internet, and getting yelled at by by your mom, okay, for tying up the phone lines. So where is this phase 2 when it comes to the blockchain and crypto? How do we use the blockchain? I'd like to compare the usage of the internet to the usage of the blockchain. For us to use the blockchain, we need to be able to send tokens, crypto, across it. For example, for that purpose, we need to own some token/crypto. How do we own them? Simple. Go out and buy them. Unfortunately, popping around the corner to the local corner shop, 7-Eleven for international reader, that doesn't work yet. This article was written on June 10th, and look how fast things progress. This is now 20 days later, and we are able to go around the corner to the local 7-Eleven, the CVS, and Rite Aid to purchase crypto and Bitcoin over the counter. Not crypto, but Bitcoin over the counter at these corner stores, so to speak, except in New York, of course. Phase 3, the enabler. By now, we are all familiar with how to connect to the internet, and in similar vein, we all understand where to buy Bitcoin from and therefore use the blockchain. But he's going to skip all that and go to phase 4. This phase has multiple layers. This was the era of Amazon, Skype, Twitter, and Facebook. And that's where we are right now, as far as the blockchain is concerned. But, when he's comparing it to crypto, phase 4 is where we will spend crypto, where we will purchase services and goods using crypto. We may even get paid our salary in crypto, and that's what the future is. It's not going to happen overnight. It's not going to happen between now and 18 months from now. Or it might. Things move so fast. Because like I said, this article was written only 20 days ago, and now we're able to purchase Bitcoin from over the counter at CVS, 7-Eleven, and Rite Aid. But now he's going backwards now, and he's going back to phase 3 again, the enabler. Every one of these services that we use today requires 2 things. The first generation all required an email. The second, the advent of mobile, just a phone number. Email was the key to the internet having any real value, because then companies could connect to us. He's now saying that we need that Hotmail moment, because that's where we were able to have our first emails, so to speak. Before, it was AOL. AOL was the internet service provider, but then Hotmail came along, and then Hotmail, they weren't the internet service provider, and guess what? You could access Hotmail from anywhere in the globe. So that's what we need right now. We need to have that Hotmail moment where we're able to have access to our crypto anywhere in the globe via our mobile phone, and it's got to be able to talk to all the different networks on the blockchain, from the Bitcoin blockchain to the Litecoin blockchain to the Ethereum blockchain. It doesn't matter. That wallet needs to be able to transfer value and exchange between each other. So if I'm sending you Bitcoin, if you only want it in Litecoin, and then the value of it automatically comes to you in Litecoin. So what's the Hotmail for crypto? Wallet. That's what it is. The wallet. You need that wallet that able to have that interoperability to exchange value between the different blockchain networks. It must make the user money. Email did not start with this use case. It must save the user money. Email saved on postal costs. It must save the user time. Email saved time compared to traditional posts. And he goes on to say, imagine if you owned the majority of wallets globally and had the majority of crypto flow across your wallets, you would, in theory, become the world's largest bank, a true challenger bank. Now there's an idea. And this is great. This is a great idea in theory, but a bad one also. The banks will come for the company that does that. We've seen that with Facebook, with their quote-unquote crypto, their stablecoin. All the banks came for them. All the regulators came for them. All the governments came for them. So unless regulations change or, eats up a little bit, that's not going to happen. Or if it does happen, it has to be some kind of like anonymous wallet or something that users have to use. That's my 2 cents on that, or my 2 Satoshis actually. Let me know what you guys think. Remember to smash that like, hit that subscribe button, and let's discuss it some more in the comment section below. This is Sergeant Crypto, and I'm out. Peace.